Good morning, everyone. Great to see you all today. Welcome to the room. It is Thursday, September 3rd, 2020, the morning session here, and we are seeing the market take out lows in a way like we haven't seen in a while. The ES just took out the previous session's low. The NQ took out the previous session's low and started to form a rounded bottom here, and right about there we saw increased selling pressure here. Sell program comes into play right there. Boom. The ES dropping, and we've got quite a bit of selling pressure on our hands here, and I don't have a position right now. I was looking for signs of a bottom to reverse this thing back up. But when you don't see those signs, you end up not buying, which is good. But you also don't end up selling right away at times, because I was looking for that potential low. And I think right at a point about the time where everybody figured it wasn't going to go is right at about the time where the selling starts, and that's where this thing led us right back to the previous week's high price. So the previous week's high is right here. Previous week's close is 12,002. This morning, I think it was Adrian who asked if there was any wicks in the QQQ, and I looked back and there was that one from a couple of days ago, and that's kind of where we're headed. Still, we may still get to that level. That level down there for the QQQ is 295. Oh no, 292 rather, 55. So 292.55. We just got a low right now in the QQQ, but we're reversing off that low a bit right now. The low here was 93.52. So we're about a point off of that wick, and that would put us at about 12,002. So basically 12K in the NQ. Very similar price level, or thereabouts. So again, we still have that wick, and again, this market really reacting to those SBWs here lately. We did go a while without seeing any, right? We went weeks there without seeing anything because we were in a straight trend up, but now we're getting some two-way trades, some volatility, firing wicks in both directions, and you're seeing how great they can be in helping us forecast that direction. So pretty great stuff there. With those wicks. There is one that Scott mentioned as well, is up above, and that one is an Apple, and that one could be something that gets hit at some point after this pullback. But right now, the NQ, again, just hit the previous week's high price, but it also just hit the 8-period pivot-based EMA in the daily time frame, which is 37.5, and you can see the low here is 34.50s or whatever that is. So we've just gotten a bounce off a first test hit in the 8 PIMA, and the 8 PIMA hasn't been tested since August 20th, and that was a failed new low day that turned into a bullish outside day. Let's take a look at that real quickly here. I'll drag over this chart. So right now we just saw this thing test below the previous week's high and bounce a bit. Over here the test was below the previous session's low and below weekly VWAP, which JD just called out there. We're now below weekly VWAP and below obviously S3 in a downtrend phase here. So previous session's low below S3, and you have weekly VWAP here. Again, could be a spot where there might be some action, but I'm hesitant to really counter trend fade this thing right now, and the primary trend is down on a day time frame basis. So unless we see something significant, not really eager to bounce it right now, and instead the pullbacks offer selling opportunities at the moment. until proven otherwise. So looking at the daily time frame over here, this may prove otherwise, right? You can see the 8-period average is this golden average. We just hit it right now. That's the low. And the last time we hit it was here when price was dropping, and it ended up being a bullish outside day there. That's the last time we tested it. Other than that, it's been very, very strong. And hitting it right now could at least give us a short-term low here. And then that also coincides with the previous week's high price. That could be an opportunity again to maybe get this thing bouncing back toward the breakdown point of 12,200. You know, that would be a pretty decent move from where we currently are of about 150 points. But again, got to see great signs of rejection, because right now I'm not seeing it too much, but it is testing the right zone on the daily chart basis. If this thing really continues to keep going, the stop run date calculation takes us a bit lower. As this thing rejects here, let me run the stop run day calculation. Maybe you already have. Okay, here it is. Oops. I don't know what I did there. Okay. Okay, I got a calculator up now. So right here, looking at this, you can see just a little bit of a reaction there. That's very, very interesting, that little reaction that's happening there. You can see right now it's popping back up. This is a little bit of vigor right here. It's not too bad for signs of rejection there. For an early little rejection, that's not too bad. That's what we're looking for. You have this low here, boom, it pops, comes down, and that reaction right there, and has a not squat buy signal there. And then it pops up, and then it starts to seal off this leather zone, and we're moving a little bit higher. That's not a bad reaction right there in that area. You're starting to see the YM react, the ES with a higher low here, whereas the NQ was a bit of a lower low rejection. And again, this is happening below the 8-period PMA. From the daily time frame. So that's not bad. This is kind of what we've been looking. Well, what I've been looking for this entire morning was, okay, are we going to form a reaction at some point at one of these levels and reject? But it never looked appropriate, never looked right. And right there, that looks about as good as it gets. I mean, obviously we could always see something a little stronger, but this is about as good as you'd like to see from a scalping perspective. This is exactly what you'd like to see from a scalping perspective. And now we may see a pullback perhaps into 50 or as low as 45s. That could still be bought for a push into 120, maybe back to value here at about 182s. But again, I mentioned as a scalping entry, right? Because when the market is dropping this heavily during a day, it can always get worse before it gets better. And so you definitely don't want to hold on to a trade here if it can't bounce, right? You want to be a weak hand here, basically, You're trying, you're dipping the toe in the water here around this zone if you like this opportunity, but you're definitely not hanging around if it doesn't work out, because the sell programs are clearly in play right now. This zoom, they drill it down so quickly. So if it doesn't work, you got to be a weak hand and take it off. But from a scalping perspective, this isn't bad, but it needs to hold this zone right here. Otherwise, it's going to drill down another leg pretty hard. So that kind of took my focus away right there as I was calculating the stop run calculation. So let me do that again. So today's high, so the way you do that calculation here is you run today's high, which is 438, 12, 438, 75. And then you take the that range down to the previous session's low. So subtracting the previous low, which is 12,172.25, and that gives you a range of 266.5 points. 266.5. So now you take that 266.5 and you subtract it from the previous session's low, and that gives you a target of 11,905.75. 11,905.75. And that would take you to about the top of the pivot range for the month. So if we were to continue from here, say we can't hold this zone right here, then we're looking at that level right there. And we're taking this level and that level, seeing the range, and then projecting that range from this level down, and you get this level. Oh, okay, so yes, if there's a stop run day down, the idea is that, or up, or whatever the case is, you typically see this midpoint drop to about the breakdown point right there. So that midpoint would drop and become that blue line basically right here at this low. So that means you take this high and subtract that low, and you get this range. In this case, that range is 266.5. And then you take that low and you subtract it from this range. Or sorry, you subtract this range from this low. And that gives you the extension downward, which is the 905s, or whatever I called out there. So that's the calculation. So that means, again, here's another level where it's trying to hold, another zone where the NQ is trying to hold, and if it can't, if the weak hands give out again, and it looks like they are, we have that 905 level that's coming into play, or whatever it was, 904.75s. 905.75s. Oh yeah, Dwayne just punches it into a spreadsheet. That's brilliant. And so right now, again, this thing is just kind of not able to find a low right now. You can see right here, it's still struggling. So I still have not, that was about as close as I saw as an opportunity to get going to the upside. And you can see again why you want to be a weak hand here if you're trying to counter trend fade this thing, if you even push the button at all. And I think Scott will remind us all that it's these days where you can really get hurt in your account, because you know, those of you and us, those of us trying to find a spot to buy, and you keep trying to buy, but it keeps dropping, so you're trying to catch a falling knife. Some of the best traders I've always been around have been very visual on a day like this. You know, I don't want bloody hands, for example, from catching a falling knife, because again, this thing just continues to drop right now. So you can see right here, 12K now being taken out there. in the NQ. Let me see over here. So QQQ got that morning wick. QQQ just got that morning wick and filled it, the one from a couple of mornings back. The 92.55s, we just hit it. And likewise, we went and filled the 12.002 previous week's close price that we talked about this morning. So that's incredible how that has happened again. This is 2 mornings in a row where it's come down here to snag a couple of deep wicks and then go. And now, again, another key level to watch. Previous week's close here. And we just filled those QQQ, that QQQ wick. Again, another spot to watch for rejection. And you can see how, again, on a downtrending day, unless you kind of predict it ahead of time or you can see it, you know, again, Adrian has a really good leg up on us sometimes because being across the pond, you can kind of see the violation or the breaks happening earlier than when we get to the market. But I did see right after the close yesterday, the NQ was already starting to show weakness. It did jump around and get a little jumpy after that, but I mean right away it did show weakness yesterday, but it really started to dump after the London Open here, and that was pretty much it. You know, it was pretty aggressive first IB range there, the IB move, and then from there it's been expansionary state ever since. So it really had been this way the entire time, and that's why when I came online here was, you know, somewhere in here time frame. So price was here and was watching for either a reaction at VWAP or the low. And so when it got to the low here, it formed this, and then basically that it's not a bad opportunity to watch. But then if it doesn't hold, that's when I mentioned earlier, if it can't hold this level, all hell will break loose, right? And that's where this thing really turns into a huge price discovery phase trending move down. So that it had just happened right at this point at the turn of the hour. They failed to hold it, and here we are. I think for the most part, you know, this market's been very bullish, but man, the tone on CNBC this morning has been very bearish. It seems like they found every single person that was selling a position in something, or saying the market was frothy, or saying, you know, September and election risk and all that is coming into play. Someone sold a huge position in Tesla, right? So everyone, again, you start to see the parroting here, and the thing picks up steam a little bit. But if this high is in, and today remains weak, then we are just beginning an impulse wave down, likely. And that could give us a new key range in the NQ. So, for example, if the high is in, right, and we've just gotten this huge move down and we're seeing some selling pressure come into play, then we likely see this thing stretch and stretch until we get to that 11.5 or wherever it's going to find rejection, and then give us a bookend here, and then we can swing it back to the mid, and we have a new key range at these highs, and it trades up here and fills this in. So that's one way it could go. And right now, again, this market is just not finding support here. It just remains a bearish trending day down right now. So quite the turnaround, quite the sentiment turnaround. And for those of you that joined us yesterday for the monthly outlook, I guess it was timely, very timely, because the monthly outlook mentioned, you know, hey, that's what we talked about, is September averages down 2.2% in an election year since 2000. And we also discussed that we could be seeing a rotation of things to come from something higher to something lower. And that, again, could be significant. So we also talked about some sell opportunities yesterday as well. But this right now showing quite a bit of weakness still and not really finding much at all to like. Oh yeah, thanks, Dwayne. Yes, that stat was very interesting. I saw that posted in the room regarding the VIX. This was the highest the VIX has been with the SPY making new highs. I know, that's incredible. And we talked about that 25 being a new floor when it used to be the ceiling. That's going to be very interesting to see how that plays out, because again, we talked about the VIX the other day, and that one really has the potential to pop here. We talked about the rounded bottom nature here, and how that 25 level right here was so important. So here's 25s right there. And it used to be the ceiling for, bearish gyrations. And now in this different market, it's become a floor. Over here we get a rounded bottom below it, but now it's back above 25s. This could be a 25 to 35 easy we talked about before, with as high as 45 easy. And that's not even, talking about anything beyond that, right? It's just to get back across the market structure here. Boom, boom. 35s and 45s. And right now, picking up steam to the downside again is the ES and the NQ here. And you can see this right here. +5 here. This thing may go even higher. There's VXX. This is up 2% right now. 35 and 45 could be the next upside targets there as well. There's a lot of open interest at the 30, December 30 calls. $2,300 contracts of open interest there. A lot of open interest at the money. No, the 27s. Oh yes, the IWMs. Great job on that one. This is what can happen when you get that buy signal on highs, right, like this, and if you start to take out that mid and that low, very soon, if it starts to take out even these lower price levels, things can pick up steam to the downside again. This market is really falling off right now. So again, you can just tell this market has some sell programs in it right now that is just picking up steam to the downside. We're seeing huge moves and big sell programs kick in and just really drive this thing down. Again, I can't stress enough how dangerous a market like this can be if you're trying to buy the dips over and over. You're either got in, you found a way to be short, or you're kind of standing on the sidelines, or buying hedges or protective puts and things of that nature. Salud. So we actually just hit the stop run day target. We just hit it right now. There's a stop run day target. 905.75 filled. Incredible, incredible move. Again, here's the NQ. So there it is, just hit the pivot range for the month, well below 8-period PMA. Just got the stop run day down. Stop run day again when this midpoint of the day drops to or below that previous low, and or 2-day lows or something like that, right? 3-day lows. You know, you can have 3-day highs or whatever the case is, but that's how I would define a stop run day. Now, if this midpoint had come just shy of the low, right, I would still consider it a stop run day. It's just like, okay, that's close enough. You don't have to be super rigid about the rules, but that gives us a very good target on if you are short, where would be a great target. And it's uncanny how precise a stop run day target can be. So I calculated it out to be the 905.75 level, and we got a low of 890.5 right now, and are seeing a little bit of a bounce again. And again, that was off the monthly pivot range, right? So right here you're seeing a monthly pivot range bounce in a higher value relationship inside a very bullish PMA trigger zone. So again, you can see why there are bulls that do continue to come in to defend, because all of these things still look good. These are key areas where you would normally defend in a bullish market. And right now, again, you're seeing a reaction that doesn't look bad. A strong low here, a good initial bounce off this zone, and now starting to, you know, hold above an 8-period average, which is about to climb back above the 55. Back to VPOC here. So you can start to see again how this market can bring people in and to thinking, okay, is this the low now? But even when it hits a stop run day calculation, things can always get worse. What a move. So again, stop run day calculation, Dwayne just posted it there, the calculation with the parentheses. Thank you for that. This can be pinned, I believe. Let's do that, add to pin board. So I just added this to pin board right now, which means it goes to this side right here. And when you click that, there's the image right there that Dwayne just posted, and you can see the stop run day calculation there for a bull and bear target. And that's one of the things that I liked about the new EchoFin 2.0 room. The other thing you can do is give him a little like here. Let's see, how's it work? There it goes. Or a fire. And so right there it gets put into the little pin board, and we can always reference it now when you need to get to it. You can scroll through those important posts. Alright, let's see. Got some fires coming through. So thank you for that one. Oh, just hit the mic here. So, great question here. Now, if we have found a low here after hitting the monthly pivot range and seeing this aggressive little bounce here off our stop run day target, Scott's asking here, what would you think the cap on the upside for any rebound would be here? And I think in that scenario you have a really good target zone right here back between 175 and 12,200, which could be a pretty sizable move from where we currently are. So you have VPOC here, VWAP here, and the previous session's low price. That was violated where you got the breakdown. So I think there could be a shot to come right back to that zone. So 175 to 200 would be that target. And right now we are seeing a bounce and an outside reversal here on the 1000 volume bar chart. This doesn't look bad. Again, yeah, a 100 point bounce that fast. Exactly. 890 back to the just shy of 12K there. That was huge. And so right now 950, kind of the higher low zone here. Sometimes in a bear trending market, the sharper the bounce is, right? I mean, again, but that doesn't look bad. I've been grateful to be sitting on my hands right now, but at some point, again, this type of market, it finds a low at some point, and when it does, there's a tendency to bounce back quickly, perhaps toward value, like we said here, 175 to 200. And if it were to do that move, then perhaps it may just continue to sit at these lows and trade between this extreme the rest of the day. So there's many ways this could play out if this is a strong low. But again, we'll see if it can hold this zone here, 950 to 940 zone. And it just hit 50 here. And bouncing again. Okay. Oh, let's see. I'm gonna try. The 65s here look enticing. You know, right where value is here. 67s. VPOC shift down. If they can take it bid, it could be pretty good where it bounces back up. Oh, that's 5-day VPOC down there. So far, honoring the zone here. It looks like it's taking a value bid there. Right there. Right there. Tried a couple times here. The 950 level held on the retest here. That's not bad. That's not bad. Oh, great point there, JD. Over here, we are about to finish the hour. And one thing you see over here, JD just mentioned that NQ sitting on weekly S3. That's weekly S3 here in the 15-minute time frame here. But in the 15-minute time frame, you're starting to see a rejection buy signal below. And then you go over here to the hourly here. And you can see again starting to form that tail here at the end of the hour. And you have below or at S3 right there. So that's really interesting here. In S3 in an uptrending market, not often hit, but when it is, it can be a rejection zone as well. The initial bounce has already been really good. And again, 15-minute buy signal coming into play right now as we finish the hour. GC also bouncing off weekly S3 and forming a 60-minute buy signal right now. And that 60-minute buy signal just printed a moment ago. So looking at the 60-minute over here, what I have noticed, so over here we have this 60-minute buy signal that just stuck right now in GC. This is S3 there on the weekly, S2. Nice little box down here with a breakout and a hold. That could lead to a move back up toward weekly VWAP. Over here, what I have noticed is that we have, when the market has sold off, we've had pretty heavy hours. So it's been kind of like a bearish hour. So the sell program goes for an hour, and then the next hour they turn it off and maybe reverse it the other way. So for example, bearish hour here followed by a bullish hour there. Bearish hour here followed by a bullish here. And this was a deep shakeout. There was another one here, big bearish hour. The next one they turned it the opposite way. So again, right now, and just changing the hour here, right at the previous close, previous week's close, does it start to find some footing? Again, I can't stress enough how difficult it is to try and find a low sometimes unless it slaps you in the face, because every low can look pretty decent. And right now you can see again ES giving it up a little bit, NQ back to 940, which is okay, but it's got to hold right that zone if the low is in 890. And look at the bounce and reversal you're seeing right now. So again, it's looking the part. It's looking the part. But sell stops are now right there. As soon as it can't hold it, it will drill it again. So this is not an easy day. I mean, it can look easy sometimes, but you can just get chopped to bits as well in a day like this. But it doesn't look bad. Let's see. CL. I thought CL had a shot to bounce earlier, being above VWAP the way it did, but it gave it up here. I haven't even mentioned much about CL, and this one's having a bit of a day as well today with a range of 141% of ADR. Yesterday had 200% of ADR. Big time. $940s are holding here so far, kind of, right? But man, lower highs here. It's so close to both ways right now. This doesn't look like a bad low, but we've seen it happen before. where it looked like a really great reaction just right there, and then it just couldn't hold. Now another reaction, but you're starting to see just kind of this happen right now. So at any moment that could happen right here, and that's why probably putting in a 930 stop entry right there to stop into a trade might be the best way to go in a downtrending move like this. So it's still not holding. Very, very difficult to find a low right here, especially for the ES. Now trading below 3,500. Here's a sell candidate we had yesterday in the monthly outlook. It is CSX. This one gapped open above the previous session's mid, but I mentioned this one might not be ready yet fully, but it was one to consider for whenever it is ready. It's already down today 1%, but the real area of resistance is up here between 80 and 82. And it got shy of that level by a little bit, about $1.35 shy of the 80 level. But down already here today, and if it does drop, we talked about a move from 66 to 64 perhaps coming into play. So that's the idea here. Up between 80 and 82 might be more appropriate. Not sure we get there, but nonetheless, a move back towards 64 to 66 may be down the road for that one. We also looked at O'Reilly. This one's down 1.68% today. Closed on a high. And I mentioned that this one might be due a correction as well. Last time we had a high here, it formed this box above it and failed back down. And now we're above this box here, forming a range, and perhaps it could be headed, somewhere back down. So already kind of turning down here today, but really through 450 or so, 460 really starts to open up the downside. Couple good ones right there reacting already. Oh, by the way, I forgot to look at SI a little bit earlier. Here's SI. All right, take care, Terry. Oh yeah, that CrowdStrike didn't do well after earnings. I guess good thing I didn't get filled. It was working out. The trade did work out for a while. Intraday, it was just right at earnings where it just got. I didn't see it right here during the day, but I saw it after earnings. Just didn't do well. Here's SI. This one, again, pulling back kind of like GC was a bit earlier, and still kind of trying to hold around the center of this range. It looks stuck between 26 and 29 for now, which is still bullish overall, but it's definitely falling into the pivot range here with the midpoint coming into play. Below that starts to open up more downside perhaps. So it's had quite a turnaround here. I think overall it's still strong, but if it starts violating 26, how much lower is it going to have to go first? So I think 26 is about as low as this thing wants to go here before it really needs to start turning it back around or staying within the range. As a short-term topic. Oh, here, let me grab it. Right here, there it goes. Oh, thank you, Vinud. I was just about to do that. Appreciate it. Okay, let's see. The other one here's oh, great to hear. Okay, let's see. So yeah, this one right here mentioned we could be looking at a gap up tomorrow after earnings, given how everything's going. And it had a great reaction from the lows throughout the day. Late in the day, obviously I was barely missed getting filled, but then it rallied really nicely. It did give it up just before the close, and then earnings comes out and it's gapped down with the sell signal coming into play now, so selling off the day's highs. So it definitely didn't react well there, but still holding above the LVN, still holding within an uptrending market here for the Pima trigger zone. The previous market structure level still in play at 120. So everything still looks good here, unless it really starts to give up 120 where it opens up 90. So this is an early turnaround here, but you know, still has some signs of life that could come into play. Unless things just start to fall off the map, then 90 is going to be the next target down. So far, again, this market is just not finding a strong low. And I have not put in even an order on the future side this morning. But there still could be that play coming in at some point that could get everything out, because this thing could really keep dumping. So huge weakness here. We just got a new low. We took out that 890 low and put in an 866 quarter low, and now we're holding off that 890. So you can see again the next batch of bulls are coming in to defend now and see if they can seal it, to see if this is perhaps a lower low or a bearish divergence. Sorry, a bullish divergence on the PivotBoss oscillator, which could lead to a return back to 12K, which wouldn't be a bad move from here, right? 100 handles if it can do it, but you got to get out if it can't hold, right? So again, you can kind of see the things that are building, but it's just not able to really withstand or sustain lasting strength, and it's really not able to get beyond a prior pivot high either. It continues to see lower highs. Yep, giving it up again right there a little bit. Incredible weakness right now out of this market. YM also very, very elongated to the downside. Price discovery phase well in effect over there as well. We had Autozone as a sell candidate yesterday. This one's down about 1.8% right now. Again, looking at the long-term levels here. Right there. 1267, 1268s. Rejecting right in that zone right there, right here. And perhaps we maybe do a return back somewhere between 1050 and 1075 on a far long-term basis, right? Or, you know, over the next few months. But short term, you have this zone right there that could be in play, which is an 1175. The other one over here was Ollie's. This one's down 2.18% right now. The reason we talked about this one was because of the failure to hold 100. So you have this level right here, and it got above it right there and then failed. And then you get this level right here, and you get above it. But right here is a higher high failure, and you're back below 100, and you've broken back below the monthly pivot range. So this looks pretty significant, and if it drops, you know, we have somewhere in the somewhere in the 75 zone, 70 to 75 here, where you have the 200 and market structure. So it could be significant, but it could still bounce into, say, 100 and provide that move down, maybe as high as 105 if it wanted to. But this one looks like it has a shot to rotate lower as well. Yeah, let's look at low. Oh, and oh yes, I got apps and car coming up as well. This is Lowe's. Wow. This was on our list a while back. It hit the long-term low level here, and it's just stretched tremendously since then. And it looks like it's kind of stretched, you know, basically 100% past these highs. It did it all the way back up here almost, right? It's just a huge move through beyond these previous highs there and the whole thing. So now you've left behind this very narrow strip here of profile that, again, at some point we know a time of reckoning is coming, that we have to go and retrade through that. We just don't leave that behind forever. You have to retrade through it in order to create a more robust profile with two-sided trade, right? This has only been one side. Vroom. Now you're going to have to see something down to this and maybe back up and then whatever it is. So, you know, anytime I see a super elongated profile like this, an I-shaped profile, I think that at some point we're going to have to get a big swing push. Now, it doesn't have to go all the way in one fell swoop. You know, it can compartmentalize. Say, you know, get a move down here and maybe get an impulse here and then maybe do that, you know, that and do, you know, whatever. So it goes through and trades through the areas and kind of compartmentalizes that zone and then compartmentalizes this zone. So, boop, come down here, do a little of that, and up here. So, again, the trend is super strong. But it always fails right here. That's always the clearest indication where it can fail. That doesn't mean it can't drop below it and then still go. There can be traps. But that is the level right there, and you can see how it's just been in play this entire time to stay above it and go. So if it can't hold 160 here, then I think it has a shot for the blue line. And at that point, is there enough to get an impulse bounce and now we can key range it for a while? Or is it really going to get hairy? So it's clearly a bullish stock here. And as a matter of fact, I'm coming into the zone where, just personally speaking, I will lift this market by myself come the fall here, because that's once the sun gets under 105 degrees here starting in September, October, November, I usually do a ton of things around the house and projects that require quite a bit of trips to Lowe's and Home Depot. So, you know, I still think as folks have had to be home more and things of that nature, I think this is still where people are putting their money, you know, improving those spaces and things of that nature. But at some point, I guess you're done with that and got to move on to something else. I don't know. So this is a pretty good strong trend, but we have a level to watch in case it were to fail. That's 160. Here's apps. And that strong double top up there doesn't help it, right? It really doesn't. So this one, okay, so for apps is one that right away the open price, man, this thing is still dumping the NQ here. We're at 770 now, and it looks like you know, I have the dome is not really keeping up over here. That's how. Did we just? Yeah, my dome's not keeping up at all. Remember, be cautious, everyone. This is wild. Unless you're short and loving it, I'd be careful right now. Okay, this is classic right here. Where, man, this looks really, really great. I love the pattern. We talked about why I love that pattern, but everything is off. All bets are off when you open at or around the midpoint of that pattern. All bets are off. This thing is dropping still. This is incredible right now. All bets are off for an entry at that point. Unless you were in at the end of the day, which we saw this one right at the end of the day. So I don't think anyone had time to really get in that one. But if you did, you know, a gapping down to the midpoint of a rejection day is never my favorite entry. Doesn't mean you can't get in that at some point. It just means that when it opens right at or around the midpoint of your rejection signal, hands are off until it can prove that it's going to reject that point and go higher, or find a rejection, because it, by opening around that zone, it's already kind of breaking what's happening. It can come back to that point, right, if it comes from up here and drop into it, find strength and go. But you don't want it gapping down to that point. That's already shown that the bias has already changed overnight, and now we may be looking at a failure at that point. So that's a very, very good example to keep in mind. When you have a great rejection, it's got to hold that midpoint, and if it opens at around that point and you're considering an entry, I let it shake out, and by the end of the day, who knows, we might have another buy signal that comes up, and then you can consider it again. But for right now, that is hands off. And here's car. This is a great one right here. Chucks, in that it's right at the key range high, and it's forming a bearish outside day right now after forming a buy signal yesterday. Again, I love this room because there's so many great traders in here with experience, with so many different eyeballs looking at everything. And one of the things that Dwayne mentioned yesterday was we've gotten a lot of buy signals, but they're all on highs. You know, they're all at highs, and as you know, that's not my favorite. A buy signal, as I draw it up, ideally would be at a rejection point after a sell-off. A sell signal ideally would be at a rejection point after a rally. You know, you rally, sell signal. That's right. You don't want a sell signal on that low. You know, it can happen and keep going. It just depends on where you are and what the circumstance is. It's just not my favorite to see that at highs, and then it's at a key range high. So again, one of the things that would give you pause for something like that would be a failure at the high first and then testing the mid. That always gives bears the upper hand, in my opinion. So it gets a failed high, and then it tests the midpoint, and now you start to see it push through the mid in an outside day down form. Anyway, so very, very good bearish outside day at a key range high. That could, at the very least, open up a retest into the monthly pivot range, and then violation of 30 opens up a push down a little bit lower. So just to pull back into value, given the trend. Other than that, it really needs to go through 30 in order for something more significant to the downside to happen, because it could still come down to 30 and still be bullish or trade sideways in the range. Because the one thing about this one is that it's already trading around value. VPOC is right here. So many times we want our trades to be below value or at an LVN down here so that we can see that move or reaction. Whenever price gets around value, it can tend to sit and chop around, right? Again, the old adage there, kind of the metaphor I like to use is here it's like bouncing a ball on concrete. So you have a rubber ball, you bounce it on concrete and bounces and bounces because it's at an LVN. The LVN is concrete. But when you bounce a rubber ball around value, it gets stuck. It's like mud. So it goes boom and gets stuck. So you try to bounce a rubber ball into a mud, it's not going to bounce. It's just going to go bloop and get flat, just like this, just like that. So that's the one thing here about this one is sitting around value, which would give me pause. Yeah, let's take a look at Pbct. So it looks like the NQ hit the previous week's midpoint, just below 11,800, and is bouncing. Incredible. So this one right here, you know, this is one of those ones that it looks like it's building energy for a move, but it doesn't, I don't know, it doesn't inspire confidence to the upside for some reason. It's got some increasingly lower highs here. The bounces off support have been weaker and weaker, and it looks like it may test down here if it can't hold, you know, the $10 level, 10.25 or whatever the zone is right here. At the same time, value is way up here after it failed, you know, from here. Sells off and goes. So, you know, this is not a bad low here. And whenever it can find, you know, some conviction here, you could certainly see a point in time where it returns back toward 1580. It's just right now it looks very, very choppy and heavy. And it still looks like there may be a flush to come. Yeah, here's a look at bonds. I was just looking at bonds here yesterday for the first time in a while, and very surprised how strong the reaction has been off the low here. There's a really clean reversal as well. So you're seeing this kind of uptrending behavior, very clear flat resistance here, a really good sharp turnaround already, with the potential to easily go back to 183 in my opinion. You have this previous month's midpoint, so we're right at the key deciding factor. We've just rejected the previous month's close and gone straight up for 3 days here so far. Above 178s, opens up 183s pretty quickly. And then from there, you know, we may continue to just do this for a while. But I think heading into the fall, we may see something like this come into play where we start to trade in the 83 to 92 zone and then compartmentalize that zone and maybe do this a while. So up here, not traded really well. You can see left behind a very thin portion, but we've done really well down here. So I think 178 is very important, with a shot to push to 183. Perhaps we build a little bit more energy here, and then this thing may start to rally here later on in the fall through that 183, which could open up to 192s, and then you trade up here for a bit. There is a great key range over here as well, right? The impulse high to the impulse low, back up. That can be plotted as well. So right now the NQ has a range of 695 points today. It is 332% of ADR. The ES is at 343% of ADR with 135 points of range today. This thing is dying, but again, at some point we may find a strong, decent low and bounce it back up a little bit. But I'm hands off right now unless you are writing it down or got puts and things of that nature. Again, every single time we've seen an opportunity where this thing might be forming some sort of support, it has sold off even more. So continue to be very cautious on a day like today. So one of the first things we mentioned early on is that on a day like today, you don't want bloody hands. You don't want to look down trying to catch the knife, constantly cutting yourself here. So but at some point here, the market will slap you in the face with a strong low, and there could be a bounce back to VWAP. So VWAP on any reversal would be my preferred target, and it was a little bit higher a bit earlier, and now it's come back. It's come down a bit lower into approaching the 12-100 level, which is also an LVN there. Perhaps that could be a good landing point for it if it can find a strong low. But again, I wouldn't be eager right now to buy the market just yet. Things can get much worse before they get better. But both the ES and the NQ have formed official stop run days against the previous session's low. Incredible. Just incredible. All right, well, I'm going to go ahead and call it a morning on the mic. Again, no trades for me just yet, which is a good thing because I was not looking to go short early on until things got out of control at the previous low, and then at that point it was gone. Never came back. So again, that's funny, GG. You know, actually, we're getting a lot of story time here because my my elementary school kid right now, her teacher's reading them Charlotte's Web. So every morning, there's Charlotte's Web being read aloud as I'm in the trading room. Anyways, have a fantastic rest of the morning there. I will be in the room here hanging out and getting some business done. Big old batch of books coming through as well. That are being sent out to those of you that order books here recently, which is great. Those will be out ASAP, and we'll be back on the mic later on in the afternoon at 2 o'clock. All right, take care, folks, and I'll see you in the room.